Hello, everyone. Welcome to this episode of the podcast. As true to form, Ralph has just said something highly inappropriate to try and make me laugh, and he succeeded. Today we are going to be talking about two things. One is Trump loading the bases in the Fed. And the second thing, we are going to be talking about the valuation frenzy of OpenAI because things are getting a bit ridiculous. With the first one, so the Federal Reserve is the central bank of in the US, and as you probably know by now, the chief there is Jerome Powell, also known as Jay Powell to his mates, maybe. He has been under a lot of pressure from Mr. Trump, from President Trump, because President Trump wants the interest rates to be lower than they are now. But the Federal Reserve, whose job it is as an independent central bank, they've said that it's their job to actually decide the interest rate. They are not playing ball with Trump, and they are not cutting. They haven't been cutting interest rates like recently. So Trump has doubled down on his criticism of Jay Powell in a number of ways. But it's looking like he's not going to be able to necessarily get rid of him, via conventional means. So he's basically using everything he can to try to increase his influence in the Federal Reserve. So this week there was at the end of last week, and I think actually it happened after our podcast. I think someone resigned. One of the governors resigned from the Fed, leaving an empty position. And this week, Trump has basically honed in on someone who could take that position, and it is obviously someone who is pro-Trump. But anyway, what are your thoughts on this, Ralph?
Well, it's basically a continuation of the theme we discussed last week, where we talked about the ongoing independence of the Federal Reserve Bank, or rather the threat to its independence, or perhaps the risk that Trump might hollow out or compromise in some way this independence. We talked about the fact that most central banks in the free world are independent for a good reason, because clearly what you want to separate out monetary policy from the political cycle. You want to make sure that politicians cannot dictate what interest rates are going to be, perhaps lowering them so that your mortgage rate comes down, that therefore you have more money in your pocket in order to spend in the economy, and therefore you would then vote for that particular person who does that. In other words, it is a means to make sure that monetary policy is independent from politicians who might not be able to withstand the temptation to ingratiate themselves to their voter base. It is this independence which we were talking about is now coming under threat, or at least is at risk of being compromised to some extent. The reason I was saying this is because we've just been watching the saga of Trump versus Powell, basically. Trump, true to form, has called Powell names. Actually, this went beyond name calling. It is downright insulting. He puts pressure on Powell and the Fed in general to lower interest rates at a time that the FOMC, which is the committee that decides interest rates at the federal bank, does not believe it is appropriate to do so. And that is the situation which we are facing. We have last time discussed what Trump might do in order to get rid of Powell. He can't sack him just like that. He can sack him for cause if he does something wrong, or if he is fraudulent or found doing something inappropriate elsewhere, Or, as we discussed, what he can also do is he could just basically compromise his efficacy, his effectiveness to do his job. And one way of doing that might be to announce the successor to his role in February. We need to remember briefly, maybe I should have led with that Powell's term is coming up. He's coming to the end of his term in May next year. And so if Trump were to announce his successor in February, then pretty much he would be a lame duck. Everybody would already know that the next chairman of the board of governors of the Federal Reserve Bank would be that nominee, and they being the markets, would then price into their buying and selling decisions what they think is most likely that person would go for in terms of monetary policy, which of course would be interest rates down, because that's what Trump wants. And this plot has been thickening almost starting after we went off air, so to speak. The plot had started to thicken because Trump had sacked the data boss. What's his actual name?
So her name, I forgot that, because McIntosh is quite an unusual name.
Yes.
And it was the head of the Bureau of Labor Statistics.
That's what it was, exactly, labor statistics, exactly. So the labor statistics came in and they didn't please Trump, and apparently he was irate about this. And as of course is usual, you wouldn't think about what that might signal about the economy. You just kill the messenger, which he did in this case. Now, this has an impact, of course, because if a president of the United States can sack somebody just because they bring them undesirable news, unpleasant news they don't want to hear, then the markets would already start thinking about her replacement being somebody who might actually present the data in a way that pleases Trump, or massage the data, or change the data somehow. So the trust in the veracity of the data that we're going to see from that particular institution, but also from the economy in general in the US, is starting to erode, or it is at risk of being eroded. And that has an impact, because obviously then it will be even more difficult to set interest rates, because people will depend on the veracity of this data in order to do so. So that's one small chink in the armor. The second one is that he has actually now announced a short list of people who he might consider as a replacement for Powell once his term is up. And we don't have to go through the names here. There are only two names, but the point here is simply that he has indeed announced the short list. Now, the short list might change. It probably will change, knowing Trump. The other people will rise, other people will fall. But the point is that I think we were onto something when we said he might actually pre-announce the replacement in February, or closer to the time, ahead of time. In a sense, he's not quite done this yet, but he's already floated what the next governors might be. And so that's second chink in the armor of the Federal Reserve Bank's independence, perhaps. And the third one, which I'd like to draw out here, which is a fact. You said rightly, you pointed out that one person had resigned from the Federal Reserve Bank, and her term, no, she actually did resign. I don't think her term came up. It's just she resigned. And she has been replaced by none other than Stephen Mirren. And Stephen Mirren, you remember, used to be the chair of the Board of Economic Advisors to Trump. And we know him because we talked about Mirren before, because he famously wrote an article which is freely available on the internet. I urge everybody to read it. It's a very interesting document. It's called A User's Guide to Restructuring the global trading system. And it basically outlines the philosophy, but also the policies of the Trump administration that are about to come in terms of economic policy. Now, first point here on Mirren is that he's a very highly qualified economist, very bright person. He's got a doctorate from Harvard. So let's not make any mistake here. This is not somebody who doesn't know what they're talking about. And he argues that the imposition of tariffs are not going to lead to inflation because of a compensatory effect of the exchange rate. And just to break this down a little bit, none of that is in any way dubious. I mean, these are known effects which always happen when you put in tariffs, because, and we discussed it before, so just to repeat so that everybody is on the same page, when you put in a tariff, what happens is that the importers of goods, let's make this tangible, let's say a German car. The US domiciled importers of the German car now will have to pay a higher price for that car because it's just been taxed by a tariff. Let's say they have to pay 20% more for that car. Now they will have to pay the tariff to the treasury, but that's not the point I'm making now. What, of course, these businesses are also going to do is, well, they're going to demand less cars, and as they demand less cars, they will need less foreign exchange to pay for these cars. We need to remember they're not going to be paid in dollars. They're going to be paid in euros, in my example. So they take dollars and they exchange them into euros and take the euros, and that's what they use to buy the car, and then everybody's happy. Now they have to pay more for the car, and therefore they demand less cars. Therefore they will demand less foreign exchange currency, less euros in this particular case, which means that the price of the euro comes down, and that is the same as saying that the dollar appreciates against the euro. So what you have always when you put tariffs on somewhere is that, and I'm going to make it specific now, when the US puts tariffs on some other country, then the dollar would always increase, they would always appreciate against the currency of that country. That is known, tried and tested and accepted economic theory, and it actually has worked in practice normally. That is why Mirren argues that the imposition of tariffs are not going to lead to inflation, because the depreciation, the appreciation of the dollar versus the target currency will offset some of this, because now, of course, you can buy more of the other goods which you still like, which are not tariffed, if that still makes sense. So there is a compensatory effect, and Mirren basically highlighted this effect, and that is what he believes. Now, there are just 2 points on this. The first one is that the dynamic is there, that is correct, and it's not a secret that it exists, but it is hardly ever completely compensatory. It is a dynamic that tempers the effect of inflation, but it doesn't offset it. It hasn't actually done that in the past. We can see that in the data. And the second point is, in this particular case, with the imposition of Trump tariffs and the way he did impose them, it hasn't actually done this at all. This time the dollar depreciated. And that is because of the chaotic shambles that the introduction of these tariffs were and continue to be, because now the tariffs are on, now then they're off, then they're against Canada, then they're delayed, then they're 20%, 30%, no percent, this, that, and the other. Nobody knows what is going on, which is also the reason why the stock markets have so far shrugged this off, because you can't really be sure what type of tariff is going to be sustainable for how long. And that is the reason why the dollar depreciated this time. So Mirren's argument, although in theory sound, has not been observed this time round. So I'm saying that to discuss Mirren's theoretical point and say that it also will very clearly depend on a rules-based appropriate introduction of these tariffs if Miran's argument were to be taken seriously. What the point of this, however, is now in the context of the independence of the Federal Reserve Bank, is that we have now got yet another person on the board of directors here who by their own testimony has clearly stated that they do not believe tariffs have an inflationary pressure. They don't have an inflationary component. And a person like that is, of course, not going to resist the decrease of interest rates because their economic theory prevents them from seeing the risk. So sorry, that was a bit of a long story and a bit technical, but I think we need to understand what people are thinking, especially when they are not stupid, especially when they are bona fide near genii of economics. I mean, Harvard doctorate in economics, that's not nothing. This guy knows what they're talking about. Unfortunately, they're deluding themselves into thinking something which has A, not transpired in reality so far, and B, is going to lead to long-term issues with the economy in America. But clearly, in the context of the independence of the Fed, he is somebody who is going to toe the line. If Trump tells him to lower interest rates, then he will. There's only one person on the board, we know this, but we are reporting on dynamics here, on how the story unfolds. And since last week, I think the plot has already thickened, and this was the way in, these elements are the ones which I wanted to highlight here.
Yeah. No, I mean, the drama continues. Yeah, I mean, I think it's also interesting to note as well that they're looking at the potentially shortening the terms of the governors and things as well, which presumably what they're trying to do is to have excuses so that they can get rid of people they don't like more quickly. Because apparently, I think there are still some left over that have been left. I don't know if it's the Obama era,
Yes,
but they've been in for a long time, so they want to get rid of these people so that they can load the bases.
Yeah, exactly. And just as a passing comment before we move on, I don't want to make this segment too long, but I take the opportunity to just read a quote from Miran's article that he published. The article which I referenced earlier, it's called The User's Guide to Restructuring the Global Trading System. Just to share with people what type of worldview Miran has and what type of worldview has now come to be instituted in the collective policy ideas of the Trump administration. And here it is. This is from page 23. It starts sort of in the middle of the sentence. I cut off the first three words. So the quote now starts with, tariffs create negotiating leverage for incentivizing better terms from the rest of the world on both trade and security terms. So mark this place. Tariffs create negotiating leverage. It's being used actively and programmatically to as moral suasion, let's say, to make other countries do what you want them to do. We continue. Quote, America would encourage other nations to move to lower tariff tiers, improving burden sharing. One can imagine a long list of trade and security criteria which might lead to higher or lower tariffs, premised on the notion that access to the US consumer market is a privilege that must be earned, not a right. That I want to leave with you, dear audience. Please pause here and understand that this administration believes that, quote, I lost my line. This is missing, this is losing impact, what I'm going to say, that, quote, access to the US consumer market is a privilege that must be earned, not a right. And then there's a long list of things here, which is saying, for example, maybe the US wants to discriminate based on, does the nation apply similar tariffs? So that's reciprocity, which we discussed, etc., etc. But then there are some other things which are interesting. Does the nation pay its NATO obligations in full? So we have security and economics being enmeshed here. And the last thing on the list here, then I'll stop, is, do the nation's leaders grandstand against the United States in the international theater? So if you stand up in the UN and you say something against Trump and the administration, and that's grandstanding, and that means that tariffs will be slapped on you until you hold your peace. And that's not Ralphie being unkind to the Trump administration. I'm reading from an official document of the ex-chairman of the Board of Economic Advisors, who has now acceded to be one of the governors of the Board of Directors of the Federal Reserve Bank, the institution entrusted to lead independent monetary policy. And that is where I stop.
Okay. I mean, yeah. I'm not going to add
Over
to that.
to you. You have your own thoughts.
I'll just leave it there. Right. So let's move on to the next thing, which is basically OpenAI's valuation just keeps going north and north and north. It had another funding round. It's worth even more money than it was before. Now, I have joked in the past that I think that what tends to happen is, I've seen this before many times over my career, and I would say it from my viewpoint as an ex-salesman. So I was, I'd be talking to ex-stockbroker. I'd be talking to a client, and the client would be saying, this stock, it's way overvalued, and they list a load of different traditional metrics that they use to value stocks and whether or not they're overvalued on a historical basis or a comparative basis versus the rest of the sector, or all that kind of stuff. And they come out with this, and then so over time, you'd see the share price go up and up and up and up, and there are fewer things that you can say that will stop the questions and stop the doubts, and until you eventually find yourself saying, well, look, the thing is that, yes, on traditional metrics, they are overvalued. Yes, they're expensive, but it's a momentum thing. Everyone's buying it because of the hope. That it's difficult to put a value on the hope. So, obviously that's why people are jumping on. And if it continues, because sometimes a bubble bursts, right? And then it all goes back again. And I think we kind of saw it a bit at the beginning of the year when, we had that DeepSeek moment, for instance, and everyone thought, hold on a minute, why are we putting all this money into AI when actually you don't have to and you can get pretty good results. But anyway, we've recovered from that, or OpenAI's recovered from that. So that was an example of a burst. But if it continues, then I find that what happens is usually some bright spark, either from an investment bank or a management consultancy like a McKinsey, for instance, will come up with a brand new way of valuing a company that will show that not only is the current value justified, but in fact, there is still more upside. And sometimes, this was a very, very long time ago, but I remember when Ralph and I were at the same institution, I think that there was one called EVA or something, economic value added, or something like that.
Yeah, I think that's
and
one.
I believe they whoever it was, even trademarked it. So every time you said on an EVA basis, you had to have a little TM. And you had to put it in there. And so they use these kind of, and I think that once you start getting to that stage, it is very, very difficult to justify buying into these things. So anyway, so we're kind of getting towards that stage. I feel at the moment. I feel also that it reminds me a bit of the the growth of Tesla, because and especially in a few years ago. I mean, it's still kind of the case now. They produce really a small number of cars versus everyone else, and yet Tesla's valuation is, or has been, more than every other car company in the world added together. And yet you sort of think, well, why is it still going up? And the reason there is, I suppose one well, there's two. One is Trump. No, Trump. I keep doing this. One is Musk, right? So because because he's a genius, and he's his track record, he's quite a bright lad. And then the other thing, and so they believe in him and what he does. Then the other thing is that they believe that electric vehicles are the future, because although this sounds funny now, it wasn't that long ago where everyone thought that electric vehicles were never going to take on, very niche, not worth bothering with. And here and look where we are now. So anyway, a lot of people were buying into Tesla because of Musk, because of the hopes that this electric vehicles are going to be the future, and Tesla's going to be right there at the forefront. Similarly with AI, OpenAI. I think that everyone's buying into Sam Altman. They're also buying into the fact that it is impressive, and one of the very useful things for OpenAI is, of course, everyone can have a go. I mean, as long as you've got a computer, you don't even have to pay for it. You can try it, and people use it on an everyday basis. So everyone can see the benefits of it at the moment. But anyway, so Ralph, with regard to the valuation of this, what thoughts do you have?
Yes. Interesting reference to Tesla. I mean, we discussed Tesla specifically on this show several months ago. And at the time, we were sort of breaking down the valuation a little bit. And at some point, Tesla traded on a PE ratio of 1,200 times. Just again, so that I don't get into the jargon here, PE means price to earnings ratio. And it does exactly what it says on the tin. You take the share price, you divide it by the earnings per share. And then you have sort of a multiple, which tells you how many years worth of earnings are investors happy to pay now to take ownership of that share. So in VW's case, it might be 7 times, so 7 years of earnings. Yes, fine. You have confidence in that and you pay that now. And maybe in Mercedes, I don't know whether they do this right, but the automotive industry ranges between like 7 or 8 or 8 to 10 times. So 8 years or 10 years. Not 1,000. And of course, the rating has come down since then, but it is still on something like measured in the hundreds times. So the next century of earnings are being priced into the Tesla share. And it is exactly for the reasons that you say. It is not valued as a normal car company. It is valued as a tech company which is able to do things in the future which are high growth and cutting edge technological applications, which we don't even see yet. In Tesla's case, it might actually well be robotics, which is also owned by Tesla as a company. But I want to dwell on this last bit, which links up to something you said. What I said is people trust that Tesla as a tech company will be innovative enough to generate applications in the future, here it comes, that we don't know about yet. And that is interesting, because normally the markets would be more pragmatic than that. You value future earnings, you forecast the growth that these earnings might have based on what you are seeing now, based on what the economy does and what the sector in which the company is trading, in this case, we're now doing the Tesla example still, the automotive sector might be able to generate. And then you have maybe 5 or maybe you have 7% earnings growth. But in Tesla's case, what you are inviting others to believe, well, indeed, what others do believe, otherwise they wouldn't buy it at that rate, is that the earnings, either you can formulate it like this, you can say that the earnings growth of Tesla is going to be in the 30 to 40% range for the next 20 years, or you would have to say, well, actually, that is what you would need to be able to say, but then you would need to rationalize that further by saying, yes, maybe that's not going to be achievable by the cars they're selling, but they're also doing robots, and the robots are going to do, oh God, all sorts of things which we are not clear about yet. And that's always the sign of a bubble, when people are happy to pay money for stuff which hasn't even materialized yet. This is the definition of a bubble. It's completely intangible. It doesn't exist yet. And that brings us to OpenAI and AI in general. Because in the AI world, which I do not know intimately, of course, I have a very good friend who is an AI entrepreneur, and he keeps me up to date of what's going on in that world. And he, of course, himself is an AI entrepreneur, so I kind of know how he thinks. And the AI world apparently has convinced itself that AGI is just around the corner. The abbreviations mean AI, everybody knows, is artificial intelligence, of course. AGI stands for artificial general intelligence, and the definitions of what that might be vary. My favorite one is to say that it is not a specific AI application which does one thing. It is a general application which does many things. So if you think about your computer, which you have on your desktop, it doesn't just run your word processor or your Excel spreadsheet. It does many other things as well. So the PC, which exists in its form that we have come to know for the last 30, 40 years, is a general technological application, not a specific one. And that is, I think, what we best understand AGI to mean. Other people think that it is a more ambitious definition. It stands for the general, stands for a machine that is cognitively able to do everything a human being can do. So that is a much wider definition, and it appears to be the case that the AI world, the Anthropics and OpenAIs, etc., of this world, are feeling that they're on the cusp of getting to AGI. And the next step after that is known as ASI, artificial superintelligence. That would be the stuff of my science fiction novels, which I read when I was 14-year-old as a teenager. Supercomputers, which basically run everything, and they are much smarter than every human being can ever hope to be, that sort of thing. But let's go back to AGI, because that's the holy grail. And that is seen to be around the corner. Now, of course, I can just simply state that. You don't have to believe that. But if you have heard, there was some interesting news flow recently, which made me sit up, which is that Meta, company once known as Facebook, is actively trying to poach talent from OpenAI and others. And they're paying signing bonuses, which are quite astounding. Now, what would be an astounding signing bonus in the world which we used to live in the world of the City of London in finance? Well, I mean, £1 million would be an absolutely stonking signing bonus. When I was active, I had only heard once that an analyst was moved for £1 million mark, and that was the entire package. They do exist, but they're very rare.
Yeah, I have heard. Yeah, I know someone who went for more. But these
are also multi-year packages normally.
Yeah,
it's not as if you get paid £1 million for 1 year. It's sort of this is still a stonking number, of course, but it might be.
It's like 2 years.
Yeah, it might be structured over 2.
It's like no. It's not 1 year. It's not 1 year. It's it's like 2 maybe. And
it's unfortunately it's pre-tax as well.
Yeah,
and it's in dollar.
Yeah.
And by the time you hear that, you go like, oh really?
Yeah. No, is that all? Is that all?
Can't be asked,
Yeah.
then, can I?
So,
But
yeah.
the interesting story that I heard, not heard, it was reported in the press, in the
Mm.
Times, is not, we're not talking about 1 million, we're talking
Mm.
about more. What are we talking about? So the story of just is an anecdote, it's funny. There was a person who Meta tried to poach, and the not signing bonus, the package, was $150 million.
Mm.
Again, just like before, I'm going to ask you to pause and run this number through your mind. $150 million is a pay package structured in some way, maybe 2 years, as you said.
Mm.
But the person kind of went home and he was 24 at the time. He was probably still 24, just been reported. And he went like, I don't know, I think I'm being taken advantage of. This is a low ball offer. So we went back to Zuckerberg and said, mate, this is ridiculous. I mean, you're taking advantage of me. And Zuckerberg apparently said, yeah, okay, so fine. $250 million then. And $100 million to be paid in the first year. Now, these are stonking numbers. That's amazing, even to people like us who used to live in the world where bonuses were paid, which sometimes I thought were quite ridiculous. Not to first-year people, but to investment bankers who run companies. Yeah. There, you would of course also see these type of numbers, but you would have to actually run investment bank, be the CEO before you get this type of money. We were talking about a 24-year-old whiz kid being paid this type of money, reportedly. And now, to bring this back to my point from earlier, this is a world in which apparently people believe that AGI is around the corner, that they just have to make the final push and then it will be there. And whoever comes first, whoever will crack that puzzle and get AGI to work, will of course have an untold advantage over others, at least for as long as it takes for them to catch up. And they will reap the potential economic benefit from this. And that's the reason, apparently, that companies are now prepared to pay these eye-watering sums of money. Because compared to the alleged earnings potential of that AGI genie, $250 million is not all that much. And that brings me now finally to the valuation of OpenAI, because if you're happy to pay this sort of money for one person deemed to be able to run a project that gets you over the line to AGI, then clearly that sort of thing would also have to be reflected in the overall valuation of the company that employs such a person. And indeed, it looks as if it is beginning to do, because just looking at some numbers which I've written down so that I get this right now, OpenAI has now apparently been valued at $500 million, which is quite a bit for a company that generates $13 billion in revenues. These are numbers based on the latest earnings call, which was a 7-month call, but I just extrapolated this in a lazy exercise. So we're talking this type of money, 13 billion, let's call it 10 billion revenues, which of course would lead to some profit. What are the profits? Oh, it's a loss. It's 5 billion loss. So we have 10 billion revenues, but we have nothing to show for it. We have a loss. Now, arguably, this is not how I think. I valued companies pretty much all my professional life. We understand that the loss is currently being made because of investment, because of getting the infrastructure right, and it is the future potential of the earnings that are leading to the valuation. That is true. That used to be the case for Amazon. That is arguably the case for Tesla, as we have discussed. So I'm not naive here. I'm not saying that these valuations cannot exist because there's a loss, but I still wish to highlight that this company makes 10 billions of revenues and has as yet to make a profit. So before we get to positive earnings that we can then take to value them and get to 500 million, we're not even there yet. We have to, if we are analysts and project earnings out, we have to basically first of all say, okay, there will be a period of time during which the profits will be negative, there will be losses, and only then are we going to come to the earnings, which we then grow and then value, and the end result of that calculation is 500 million. And so again, as I've done before when we talked about Tesla, let's just take a look of what that means. And I reference one other company which does make profits so that we have something to talk about here. This is Microsoft, also a tech giant. They make 250 billion in revenues, 90 billion in earnings. So now we have something to calculate. This is actually making profit, this company. That's a 36% profit margin. And they have a market cap of something just shy of $4 trillion. Now that means that they are on a 44 times price to earnings ratio. Let's call it 40 times. Now, if we said that OpenAI also made a 36% margin on their 10 billion of revenues, rather than currently making a loss. So if we're saying that, okay, by the time they're starting to make a profit, let's just reference Microsoft and say if they're doing like Microsoft, the profit would be something like 5 billion. Then applying that market valuation of $500 million gets you to a PE of 100 times. So even Microsoft is not trading on that. Microsoft is trading on 40, Tesla is trading on 100, OpenAI on profits which as yet have to emerge would be trading on these fictional profits which I have just invented on 100 times PE. And looking at this in a different way, you could say, well, if they made the 5 billion profits, then what you could also say is that 100 times PE could be seen differently by saying that they would just have to grow the earnings quite rapidly in the next 10 years, let's say. But that growth rate is 160%. So this is also an absolutely humongous growth rate. So whichever way you turn this valuation, there is a lot which investors in an upcoming IPO would need to take on trust before they are paying up for that. And if they were to do this, then that is exactly linking up to your point earlier. That can only be done by saying that, well, but AI is a potentially transformational technology which is going to generate economic value which we basically haven't seen before. But if you look at the use cases which AI currently has, then this is yet to be shown what the actual profitability of such a technology can be, over and above the fees which OpenAI generates from its user subscriptions. That's a tangible thing. But it has to be a lot more than that to value a company on that basis. And that is where we're getting to the hope value, the unseen things, the technology that might emanate from AI in the future. And that is, again, just as it is in Tesla and just as it used to be before Amazon had the success it arguably had, a bubble. And that is what we are still in.
Yeah. No, I agree. At the end of the day, I think the advantage that OpenAI has with, say, ChatGPT in particular, is that everyone can see it, everyone can use it, and so I suspect that that's how it can grow so quickly. I think that we are seeing examples of where AI is being used to save money in the first instance. But I think that's going to evolve over time. I mean, that may well be, there may be new uses as well that we don't know about. But
exactly.
Yeah.
You've just said it. That's exactly what I said. There may be new uses we don't know about yet, but we pay for them already.
Yeah, that's true. That's true.
Nevertheless, I'm not arguing against AI. I'm a fan. I do think that it's a transformational technology. And what we're seeing in these valuations is, I believe, a bubble. There's a lot of hope value here. It all rests on AGI actually coming to becoming reality. And then we still have to see what the actual applications and money-making applications of AI are going to be.
Yeah.
But yeah, there we are.
There we go. Well, look, as always, great pleasure. And yeah, I mean, we've got to try at some point to do a podcast where we don't mention Trump at all, but it's very, very difficult at the moment. Anyone who feels like that at the moment, I feel your pain. But if you feel like that, just imagine what it's like to be like me when I'm desperately trying to write stuff every day that I kind of think, wouldn't it be great just to have a day off Trump? But it's just, he just dominates. He dominates the headlines. Like, I have to say, I don't know, I've never seen anything quite like this. Like, it's literally, there's something every single day with him. And I don't think, I mean, here we are, we're 8 months, aren't we? 8 months into his presidency, and it's the same. So anyway, talking about flooding the zone. Anyway,
exactly. That's Steve Bannon's official advice.
Yeah.
Fill the space with
feces.
He said, he used a different word, but that's what he said.
Yeah.
It's a quote. You can look it up.
Yeah. Anyway, all right. Well, look, thank you very much indeed, as always, for your gems of genius, and thank you very much for everyone for listening to watching Watson's Daily. Thank you very much for your support, and we'll be back again very soon.
Excellent. Thank you, guys, for having me. Thank you. Bye.